Riot Platforms recently dropped their Q3 earnings with 180 million in record revenue and 104 million in net income, but the stock is down 45% from its yearly highs amid Bitcoin volatility. Is this the ultimate dip or a trap? Keep in mind, this went from $3 to $75 in 2021, and it might explode again. In the next 15 minutes, I'm analyzing Riot based on 6 factors from their mining to leadership and giving you my conclusive rating and a 2026 price target. Stick around, one rating is going to shock you. Give this video a like if you're watching Riot after Q3 earnings. What's up everyone, I'm Shubham, and in this video series, I'm doing an in-depth research on stocks until we find one with 100x potential. Riot Platform just dropped Q3 earnings on October 30th, showing revenue exploding 112% year over year to $180 million, with net income flipping to $104 million profit. Yet the stock's trading around 12.7 amid broader crypto fears and Bitcoin dipping below 90,000. Is this the entry for the next bull run? Before moving on, this is not a financial advice. I'm sharing my analysis for education purposes only. Markets are risky, so you need to do your own research. Now, let's break it down with my 6-factor framework, where I will be rating each on a scale of 1 to 10 and giving you a final score. Factor 1, company's business model. Riot Platforms trades on Nasdaq under symbol RIOT, traces its roots back to 2000 as Bioptic, rebranding to Riot Blockchain in 2017 to pivot fully into crypto mining, and became Riot Platforms in 2022 to reflect its broader infrastructure focus. The company is headquartered in Colorado with major operations in Texas, and they are a leader in vertically integrated Bitcoin mining, building and operating large-scale facilities powered by low-cost energy to mine BTC efficiently. Now positioned as a Bitcoin mining powerhouse with diversification into high-performance computing, their revenue streams include several key areas. Number 1 would be Bitcoin mining operations, generating revenue from block rewards and transaction fees via self-owned hash rate. Their own infrastructure includes immersion-cooled facilities for top-tier efficiency. The second stream of income is engineering and hosting services, provide recurring income with 19.4 million in Q3 from designing data centers and leasing power to third parties. Third stream of revenue is potential AI and HPC diversification is emerging, leveraging excess power for data center tenants at their 1 gigawatt Corsicana site. Fourth revenue stream is Bitcoin holding strategy, adds unrealized gains with no sales policy to capture the upside. Over its lifetime, the company has made several major decisions that have shaped its trajectory. In 2018 to 2019, they shifted from blockchain software to pure mining with the Rockdale, Texas facility. In 2021, a SPAC merger raised $240 million for expansion amid the bull run. From 2022 to 2023, they navigated the bear market by refinancing debt and boosting hash rate from 2 exahashes per second to 12 exahashes per second. In 2024 to 2025, Riot acquired a 200 megawatt site in Navarro County for Corsicana Phase 1, hitting 36.6 exahashes per second deployed hash rate, secured 30.6 million in Texas power credits, and announced AI-ready data centers to hedge mining volatility. Riot is no longer just a miner, it's an infrastructure play in the digital asset and AI era, with over 100 patents in cooling and efficiency. In 2025, they captured 4% of global hash rate, and Bitcoin holdings are up to 19,324, valued at $2.2 billion. Let me know in the comments if you love their energy edge. I'm rating this business model a 9 out of 10 for its scalability and diversification pivot. Moving on to factor number 2, which is financial performance. A great business model means nothing with solid numbers to back it up. The fresh Q3 earnings show revenue at $180 million, representing 112% increase year over year from $84.8 million and an 18% quarterly jump, beating estimates. Net income came in at $104.5 million, a massive turnaround from Q3 2024 losses. Looking at year-over-year revenue trends, in 2023, they reported $280 million. In 2024, they grew to $350 million for a 25% increase. And in 2025, through Q3, they have hit $494.6 million already. Trailing 12 months are at $611.5 million. Key metrics include earnings per share of 26 cents in Q3, cash holdings of $330.7 million, plus a $75.6 million restricted, and a total debt of $839.7 million, which is quite big, but they have the cash to balance it out. On the balance sheet, assets grew from $3.9 billion in Q4 2024 to $4.5 billion in Q3 2025. fueled by BTC holdings valued at $2.2 billion. Liabilities rose to $974.1 million, with current liabilities stable for liquidity. Shareholders' equity stands at $3.5 billion. Their current ratio is approximately 1.5, signaling strong short-term health, and their debt-to-equity ratio is 0.24, which lets them weather crypto storms despite $840 million in total debt. In income statement, mining drove 89% of revenue, up 138% year over year, with engineering services adding 11%. Gross margins soared to 39% thanks to power credits and efficiency. Operating expenses rose 20% on R&D for immersion cooling and AI, but profitability turned positive in Q2 and Q3 for 2025. Coin exposure is high but strategic, with no concentration risks beyond BTC price. The cash flow statements show positive operating cash flow at $215 million. Free cash flow is a negative $270 million in this expansion phase, but sustainable via equity raises with minimal dilution. Outstanding shares up only 8% year over year to $370 million. I'm rating their financial performance a 6 out of 10 because they're firing on all cylinders with profitability and a strong balance sheet, but they have a huge debt of $840 million, and Bitcoin volatility add leverage risks. Moving on to factor number 3, which covers competition and external factors. These are elements outside a company's control that can highly influence a stock's behavior. We will examine who Riot is competing with and which macro factors could impact its present and future. Riot competes with heavyweights like Marathon Digital, CleanSpark, and large players like Bitfarms. Their edge lies in Texas-scale power access and efficiency, processing more BTC per dollar than most. The market is intense, but the global mining sector is exploding. Apart from competition, there are external factors that can influence the stock, and here we will look at them through the PESTLE framework to identify any concerns for Riot. On political front, pro-crypto US policies under 2025 administration boost mining, though energy subsidies could shift. Economically, Bitcoin's $90,000 price and halving effects drive rewards, while falling energy costs down 10% year over year aids margin. Inflation and rate cuts spur capex. Socially, rising crypto adoption normalizes mining, but energy debates persist. Technologically, AI pivot aligns with the hyperscale demand, and Riot's patents lead in cooling. Legally defined SEC regulations favor transparency with no major roadblocks. Environmentally, Texas renewables and credits mitigate carbon scrutiny amid global green pushes. I am giving them a rating of 8 out of 10 because they are primed for BTC and AI boom, but energy and hash competition requires agility. Comment down below if you think macro tailwinds will supercharge miners in 2026. Next up is factor number 4, technical analysis. Technical analysis should not be the primary deciding factor when value investing, but it can optimize your entry points by examining price action. The key is to keep it simple. The current price is $12.7, down 47% from its 52-week high as of November 24. The 52-week range spans for $6.2 to $24. The stock has broken below a rising trend channel from the 2024 lows, signaling cooling momentum tied to BTC's pullback. It's below the 50-day moving average but holding above the 200-day, flashing mixed but bullish long-term signals. It's been consolidating between $12 to $15 since October, with volume spiking 50% above average on the Q3 earnings release, indicating renewed interest. The dip ties to crypto fatigue, but the relative strength index is at $30, which is oversold, pointing to rebound potential. I'm concluding my technical analysis by giving it a rating of 7 out of 10. There's clear upside if the support at $12 holds, but the volatility rules. Watch BTC for cues. Now the factor number 5, psychological analysis or the human factor. This one is not as crucial if we are long-term investors, but I believe we can optimize our entries just like technical analysis. Why do you think Riot dipped despite crushing Q3 earnings? It's the human factor at play. There's extreme fear gripping the market right now. Big investors are trimming crypto exposure or going short. Economic indicators are shaky with tariffs looming and national debt hitting $38 trillion. Speculations about a crypto winter is rampant. Both the crypto and stock market fear and greed index are at extreme fear. BTC is at peak pessimism with money flooding safe havens like money markets at record numbers. If sentiment flips, this sets up a massive short squeeze. The only catalyst I see for flipping sentiment is Fed's decision in December. If they cut rates further and hint at QE, as in prior signals, markets could ignite. Currently, market sentiment is ultra bearish and it's amplified from mining stocks. Riot could move lower until Bitcoin stabilizes, but fear creates opportunity. I am giving this a rating of 7.5 out of 10 because extreme fear often marks bottom for oversold gems like Riot. Share this video with a friend who's panicking over crypto dips. Moving on to the final factor, leadership. For me, this is the most important factor when deciding whether to invest in a company or not. So who is really driving this company forward? Let's zoom into the management team because great leaders can turn pivots into profits. Starting with the CEO Jason Les, who took the helm in 2021 after joining Riot in 2017. A Bitcoin veteran since 2013, he has deep experience in mining operations and protocol development as an engineer. Before Riot, Les was self-employed for 13 years and he brings a unique edge from his background as a professional high-stakes poker player. He holds a bachelor's degree in computer science, scaling Riot's hash rate 3x while leading the AI infrastructure pivot amid market volatility. Next, the CFO, Colin Yee, who joined in 2022 as head of corporate and finance operations before becoming CFO later that year. With extensive finance expertise, Yee previously served as CFO for a publicly traded Canadian real estate company and a boutique private equity firm focused on renewable energy. His track record includes managing risk, IT, HR, and financial operations. Then comes Executive Chairman Benjamin Yee, a blockchain pioneer who joined Riot in 2018 as a director in audit committee chair, rising to executive chairman in 2021. A CFA since 2008 with memberships in CFA Society Toronto and CFA Society Cayman. He has a strong background in investment analysis and corporate governance from prior roles in finance. He has guided Riot through strategic acquisition like Corsicana and the 2021 SPAC, focusing on long-term growth in digital assets. Additionally, the COO, Stephen Howell, who was appointed in June 2024 after serving as CEO of ESS Matron, a company acquired by Riot. With more than 2 decades of experience in the power distribution and electrical system industry, Howell previously held roles such as Vice President and Senior Sales Representative at Consolidated Electrical Distributors. He is responsible for overseeing Riot's operational efficiency, including mining facilities and AI HPC pivot, leveraging his expertise in electrical engineering and manufacturing to drive infrastructure expansion. The team's track record includes the 2021 SPAC, Rockdale ramp-up, and Q3 2025 record profits, bold moves like zero BTC sales and AI leasing. I'm giving their leadership a 9 out of 10 because they're executing machines with a clear vision. What are your thoughts on Riot's AI mining habit? Game changer or a distraction? Comment below. Considering all the factors we have discussed so far, I'm giving this an overall rating of 7.5 out of 10. Riot is a high octane play which could hit $40 to $50 in 2026 and potentially go to $70 long term if Bitcoin climbs to 150,000 and their data center leasing business picks up steam. It's a high-risk, high-reward play for crypto believers, but if you lose sleep over volatility, I recommend you stay away from it. Predictions are not guarantees, so track BTC price and their HPC business expansion. Let me know in the comments, are you buying, holding, or avoiding Riot? Thanks for watching. I will see you in the next video. Until then, take care and invest wisely.